Have you ever felt completely lost when your accountant starts talking technical jargon? Perhaps they're talking about retained profits, accruals, prepayments. If you are in that situation where you're feeling totally lost, we're going to break down some of these key terms today to give you an insight into what they really mean in real layman's terms. So let's start. Profit versus cash flow. This is a real common area of confusion. Cash flow is actually quite simple. It's the money that's in your bank account. So it's the money that comes into your business, into your bank account, and the money that goes out of your bank account. Profit is a different measure. What profit brings in is things like accruals and prepayments, where your accountant is adjusting for timing differences. So a good example of this is for example, insurance payments, where you pay those in advance. And those will be treated as prepayment, and then they'll be adjusted in your accounts. So your accountant will be adjusting your profit, but he won't be adjusting your cash flow. Your cash flow is what it is. Next one, gross margin. So your gross margin is your sales, so how much you've billed less your cost of sales or the cost of goods sold. So your sales is fairly straightforward, that's what you've billed. The cost of goods sold or your cost of sales is the things that you've had to buy to make those sales. So a good example of that is if you're a retailer and you're buying stock, the cost of that stock will be shown in your cost of sales. So the gross margin is your sales less your cost of sales. The next one is operating profit. This is your profit before tax and before interest. And this is quite a pure measure of how your actual trade of your business is performing. That's why business owners like this measure, because what it really shows them is what the profit is before one-off adjustments are brought into the business. The next one is net profit. Net profit is the final bottom line profit. So this is how much profit you are left with after all of your income is taken into account and all of your costs are taken into account. So that is your net profit. The next one, debtors. This is a really common one. We talk about debtors. People assume it's how much the company owes. Actually, that's not the case. For debtors, is who owes you money. So this is your customers owing you money. Another common terminology is also aged receivables. So what people are saying, what is your aged receivables balance is? It's what your customers owe you. And it's a really important measure as well, because what we're looking at is if there's any sort of bad debt, people aren't paying you, or if they're paying you late, then that's going to impact your cash flow. So that's a really important measure, debtors. The opposite of debtors is creditors. So this is the opposite. So these are the people that you owe money to. So these are your suppliers. So in your business, as you're paying off your suppliers, you'll be reducing those creditor balances. So if you see the word creditors, it's really the money that you owe to suppliers. And another terminology that people use is aged payables. It's very sort of similar. So the aged payables is the breakdown of, or the timing of when you're going to have to pay your suppliers. So some of your suppliers you might be paying on 15-day terms, some of them might be paying on 30-day terms. The aged payable gives you that breakdown. Next one, balance sheet. So what is a balance sheet? Well, balance sheet is simply a snapshot of your business at a point in time and shows you its value. So it's capturing all of the assets of the business and all of the liabilities of the business. So what you own and what you owe, and it will take one from the other to give you a retained profit position and an overall net asset position. So that's what balance sheet is. Depreciation. Again, depreciation catches people out, confuses people. Actually, the measure is actually quite simple. What it's doing is if you are buying assets in your business, so physical assets, for example, computers, cars, buildings, what depreciation does, it looks at the economic life of those assets. So if you're looking at a computer, for example, that might be 3 years. It then breaks down that expense over 3 years. So if your computer costs you £300 and you allocate it a 3-year life, the depreciation will be £100 per year, and the £100 will be recognised in your profit and loss each year. Next one, accruals and prepayments. So accruals, if you got an expense, what potentially you're looking at is the timing of that expense, of when it needs to be recognised. Talked about insurance earlier, so that's a good example of a prepayment. Often when an insurance premium is paid, you'll pay up front for the full year. Okay, so what you've done there in that situation is you've prepaid that expense. But what your accountant will normally do is adjust that in your books and only recognise the amount of months that are in the accounting period. Accruals are sort of a similar concept, adjusting for a timing difference, but it's kind of the opposite. This is where you've potentially incurred a cost, but you haven't paid for it yet. So what your accountant will do is accrue that cost, and then once that expense is actually paid, they'll reverse out that accrual, back out that accrual, and then it will just be replaced with the actual cost of that expense in your books. Next one, retained earnings. What does that mean, retained earnings? Well, as you trade, you will hopefully accumulate profits, and the retained earnings is your total accumulated profits to date. So each year, hopefully you're making money, hopefully you're making profit, and if you are, your retained earnings will increase. But equally, if you have a bad year and you lose money, your retained earnings will dip. But what it is really is like an accumulation of all of your annual profits all brought into one place, and that is shown on the bottom of your balance sheet. So there's 10 key terms or key accounting phrases that hopefully that's given you a bit of insight into what each of those means. If any of that's been useful, please like and subscribe to our channel.